Years ago, I was, with this, learning what everyone's learning, about risk rewards and about the win rate and the fixed risk you put into a trade and your positions and your trading, and I felt something was missing, because you're there, learning these strategies that are supposed to give you a certain win rate or a certain risk reward ratio, and you start executing that trade and applying that strategy, and you realize that it's not giving you the results you were expecting, or suddenly you have to be you shouldn't have more than 5 trades in a row, because that's your win rate, your expected win rates. But suddenly those more than 5 trades in a row come, the losing trades come, and you start questioning your strategy, and you start questioning your statistics, and you start going into those mistakes that eventually you end up losing money or blowing accounts or whatever it is. And I felt something was missing. Trading is not so straightforward that you place your trade, you buy or you sell, you place your stop loss, and you let the trade go. When you start understanding that there's a lot of things to do once the trade is live, once the trade is on, you can really improve your statistics and you can improve your performance. And I started, investigating and learning and watching others and studying from what it was available back then. This is years ago when I started trading, and I found a lot of content related to how to manage winning trades. Okay, and I think it's something like there's a lot of content out there, and there's a lot of now on YouTube videos about it. It's very easy to start managing a winning position, because we know there's some techniques like trailing your stops, or taking part of your losses to the part of the winning trade, part of your profits to bank the profits, and there's very little conversation and discussions and content about how to manage losing trades. And if we look at strategies, strategies tend to have between 50% win rates, or if you're scalping and have some high win rate strategies, you might have 70% win rate strategies. But if you have high risk reward ratios, your win rate might be negative, below the 50%. So there's always potential losing positions in your strategy, within the nature of your strategy, that if we manage, or if we learn how to deal with those, or what to do with those, we can certainly increase our profitability. Okay, so for example, if I have a strategy that it has an expected 60% win rate, okay, I know 50% of the times the trade will go in my favor, which is fine. But then I'll have 4 out of 10 trades that those will start going against me, and potentially all the way to my stop loss and taking me out for a loss. So what happens if, through active trade management, and I'll go into the techniques, I can either fix or reduce or the impact or those 4 out of 10, the 40% losing trades. So let's say, applying some techniques that I'll go discuss with you in a minute, I can fix 2 of these trades, okay? 2 out of 4 losing trades, I will fix them. Then I've suddenly brought my winning rate all the way from 60% into 80% win rate, because I managed to fix or to reduce the impact of my losing trades by half. Okay, so this is what makes trade management so powerful, and it's something that is not I don't think is taught enough. I don't think it's discussed enough, and I think there's a lot of potential, a lot of value, and if you and that's when I realized this and started applying these techniques and started putting to practice what I learned. That all of the sudden, I became consistent, and I became profitable consistent, and my win rates went from 70% to 80% or to 85%. And sometimes you pull off your data and you find yourself, 90% of your trades are winning positions just because you manage the losing trades. Okay, so those are the messages that I want to share with you, and I have actually some live examples going on. So let's start with the presentation. I want to give you just the principles, and then we'll go into the trading platform and we'll apply some examples into live examples. Okay, so this is the passive management, which is what most of the traders are doing, versus the active management. And in the active management, we have active management when we are in winning positions and when we are in losing positions. So basically, the techniques we can apply to every trade, if it's a winning trade or a losing trade, is to scale in, okay, to add into that position, or to scale out, to reduce size, or take partial profits or partial loss, okay, to reduce the quantity, the volume of our position, either if it's on a win trade or on a losing trade. So we said, adding into a win rate, I don't know if it's something that a lot of traders apply, but it's something you have heard of, okay? If you're riding the trend and you have a pullback and you can add into that winning position, it's not unheard, okay? It's something you might be familiar with. The same with reducing, scaling out from winning positions, okay? We all know this. You were expecting that breakout, that movement to come. It goes in your favor, and you take partial profits, or you take half of the position off, and you let the rest go. And sometimes we combine this with training the stop loss just to make sure we're risk-free on that position. So I think these techniques of scaling in and scaling out, adding and reducing from win trades are very well discussed. You might be familiar, you might be applying those. A little disclaimer: I'm not a huge fan of managing winning trades, but we'll go into that later. I think the real value and the real impact into your trading is learning how to manage the losses, okay, the losing trades, because we know these techniques of putting half of your profit when you're in profit, when you're in a win trade. A lot of traders are doing that, and yet they're losing money, right? Because they are impacting their win rate. What could have been a full win, they're now making it a partial win. But when it goes into your loss, you're taking the full loss. So most traders are taking partial wins and full losses, and that's why their statistic doesn't look the way they would like to be. So what we're going to try to explain and to give some examples and live examples is on how to scale in and when to scale in, and how and when to scale out on losing positions. And with some practice and with some time, we'll see how our strategies and the statistics of the strategies will start improving. Just Anastasia, I know I'm not seeing the comments, so if there's some questions that is worth discussing, just during the presentation, just interrupt me and we'll take those questions. If not, at the end we'll handle all the questions. So okay.
And I'm gonna do the separate Q&A. So just focus on what you're saying. Everyone is really excited about hearing about the topic.
Excellent. So I'll move on. So okay, we said that the managing of winning trades, we know this. Okay, we have a breakout. We have a consolidation. A market is going sideways. I'm sorry, that we had a certain trigger. We bought. The market went in our position, and we add to that position. Okay, that's buying. Okay, or adding into a winning position. Or if we have a buy order here, the market is in our favor. Okay, we're winning. At some point, we take partial profits, and we let the rest of the trade continue to have our favors. I believe you are familiar with that. Let's move on into how to manage losing trades, okay? So let's say we have a buy position up here, okay? And the market starts going against us, okay? And our stop loss is down here, okay? The trade is still live, okay? It's open, but the trade itself is in drawdown, okay? We're losing money. If there's a valid entry point, okay, or if there's a real or it's a justification into adding into this position, okay, somewhere there, okay, then we add a second buy position, okay. So if we bought up here with, let's say, a small position, we started, small, we didn't go very heavy, we didn't go with a full 1% of the position, but we started small, and the trade starts going against us, and there's a justification for going again in a buy position in the same direction, we buy again, okay? And we keep our stop where it is. All the stop losses are in the same place. I will exemplify this a bit later. But if from this point, the trade now goes back to our initial trade, or potentially, to the direction what we're looking to accomplish. Now we have a first entry and a second entry, both going in our direction, and this trade now will have a better win risk-reward ratio than the first entry. So overall, we have accomplished two things: potentially fixing the first bad entry. It's not a bad entry, but the trade started going against it. It's something that we always know, backwards. We never know if the trade is going to go in our favors in advance. So we thought this initial entry was a good entry point. Start going against us, we add into that position, and it goes in our favor. Now we have fixed that first trade, okay, the first entry, we have fixed it, and or the whole setup, we have fixed the whole setup. And second, this second entry has a better entry point, okay, has a better entry price. So the overall statistic of this trade have improved. Now, what happened if we reduce into a losing position? Okay, let's take this example, and then we'll go to the charts to give some more examples. We buy here, okay, and we have, the trade or the range we're willing to risk, and we have our stop down here, and the trade starts going against us. Okay, what happens if instead of buying, or instead of doing nothing, just letting the trade go all the way to our stops, we take partial losses? Okay, the same thing we do when trade goes in our favor and we're in profit and we take partial profits. We do the opposite. We bank losses in purpose. Okay, we take the loss, we take partial loss. So let's say the distance from this point to this point, we were risking, let's say, $100. Okay, it doesn't matter the distance, the pip amount, whatever it is. From this point to this point, we were risking $100. What happens if at this point, when we realize, there's a key level there in smaller time frames, something that tells us, okay, if that mid level is broken, it will most likely go into our stop. If at that level I decide on purpose to take half of the loss, okay, and then the other half, only the other half of the trade that I left on goes to my stop, okay, then instead of taking $100 loss, I've taken suddenly, just a quarter of the position, $25, I banked it. So I saved myself $25 at this point, and the overall loss, it turns down, it goes down from $100 to $75. So I've saved in this example, for example, I've saved myself $25 that I can reallocate later, okay? I'll wait for my next position, I will wait for my next setup, and then I have that little $25 that I've saved from this previous trade, I will be able to apply it. So it doesn't sound like a lot. Okay, you saved $25, but it's a quarter of each position that goes against you. Okay, so if any trade you're applying, you're losing, you're applying this technique, you're saving, a quarter or a third of the position. You're saving that money, small money that you're saving for future opportunities. And all of a sudden, your losing trades, okay, are being smaller. So your risk-reward ratio is also improving. Okay, so this is just the theory, the principles behind. We'll go into the charts and we'll look for some examples. But I have one example here that I took this screenshot yesterday from the gold chart. We'll see what happened with this chart. Okay, but let's say we have a consolidation. Okay, we have a range, and we identify there's a pivot point here and a pivot point here. Okay, real time. This is coming a resistance, and we have this support down here. So the next time the price comes to the resistance levels, we buy. Okay, we're looking for the breakout. So we got into a buy position in order to anticipate, to catch the breakout. And we all been there. The breakout doesn't come. It doesn't matter that all our indicators will say, no, okay, the momentum is there, and the relative strength index, the impulse is there, and there's strength behind this movement. The breakout doesn't happen. Okay, the breakout, the market is not listening to our indicators, and the market starts going back into the mid of the range. So we have many things to do right now, right? Our stop, remember, is down here, and if we look closer into this range, okay, we can see there's also like a mid level of support and resistance in the middle of the range. Okay, we can see this point and this point, and this point, and this point, and this point, also like a significant level, okay, in the middle of the range, like that levels within the whole range is a significant level. So what happens if at that point, okay, we decide to take 50% of the trade, okay? If this trade goes then to my stop, we have saved, 50% of our money, okay, or 50% of our full position. So potentially a quarter of the full position, of the full lot size. So let's see what happens in the chart. Let me show you my screen. Percent. I'll show you what happened with that trade, and then we can discuss. And I'll show you a live example that it's live, and we'll take it from there, the conversation. Okay, so let's go into the platform. Let me make this larger. Excellent. Okay, so this is the gold. Let me zoom in a little bit. Okay, this is the screenshot I took. Okay, so I took the screenshot, and the market was around there. Okay, and you can see from that level the market continue to the downside. So in this example, for example, you remember from the presentation, our stop losses were down here. We had that significant level there. Okay, at this point, we didn't know the market would continue, okay, to the downside. But the fact that we, in this example, the fact that we took 50% of our trade in loss, okay, I banked that loss, has saved me some money that I can then decide what to do with that later. Okay, maybe I see, okay, I had a false breakout to the downside. It's still back into the range. It has the potential to go again and break to the top side. So if in this case you decide, okay, if it goes again to the resistance, buy again, you have saved some money in order to put it into that next opportunity. Okay, so that's the importance, or that's the impact of doing this banking losses in purpose. Okay, and it's very, very hard, because you say, okay, why would I take losses on purpose? Okay, I don't want to be wrong. So there's a lot of psychology also going, and discipline also going into this decision of taking losses on purpose. But you will help you will thank yourself in the future the fact that you're consistently taking losses when you should, okay, or partial losses. So let me walk you through the next example, okay, which is in the Euro USD. After doing some your analysis or whatever it is, we decide, and let me zoom in. Okay, we say, okay, we have. Let me take you real time. Okay, so let me take you back in time. Okay, we have this chart. Okay, and we see, okay, there's a nice movement to the upside. We're forming higher highs and higher lows in Euro USD in the 1 minute chart. I want to be looking for buying opportunities. Okay, and we have this this pullback. We have a double, a double top, and then when we retrace and we go back to, let me zoom in. When we go back into this level, okay, right there, I expect the market to continue to the upside. Okay, I don't know what's coming afterwards. I don't know what the market, if it's from there to create a support level and a pivot, and then to continue to the upside, or to continue to the downside. But that's my entry trigger. I expect the market from this point to go to the upside and potentially to break to the upside, or just to continue sideways. Okay, that's my signal, or that's what I expect the market to do. And all of a sudden, I see the market going down. Okay, but in my analysis, I also understand that I have a key level here, and I understand I have a key level here, and I decide to put my stop loss below this key point. Okay, I say, okay, if the market goes all the way down below that level, that means has broken this key level right there and this key level right there. Just if you with your eyes, you can see the key levels is where the market initiated important movement. So we know this is a important movement, this is an important movement, this is an important movement, and those key points or key levels are the opportunities for me to either take partial losses or add to the losing trade, okay, to the losing position. And I say myself, okay, if we break through this level and we break through this level, we'll most likely continue down, okay? So I will just place my stop below that level right there, okay, that key level. Now we go forward into time, okay? If you can see for this trade, for this example, I took one mini lot and I'm risking, okay, let me show you, I'm risking 30 pips, so I'm risking $30, okay? So if I do nothing and the market goes to my stop, I will be losing $30. Now, why not at this point? Okay, the market is already in drawdown, and if why not at this point? If I say, okay, if it's going to break this level, most likely, okay, we'll go to the next key level because there's no much in between. There's no much support in between the key levels. And if I understand, and that's how I understand the market, if we break strongly this level, we'll go to the next level and potentially to my loss. Why not taking partial losses? Okay, so if I see the market breaking hard, okay, breaking strong, like doing a strong candle and closing below that level, I will take a partial loss. And if I go, for example, okay, I'm now down $8. Okay, at this point I will be down, let's say $10 or something like that, and I go and I modify the order and I take market execution and I take half off. Okay, and I wait. Okay, and I close half, okay, because my trade is one lot, so I will take out, okay, I will take partial loss, okay, ideally when it comes down here, okay, but just to give you the example, okay, I'll close it now, okay, and see what happens. Now, my maximum loss, okay, from $30 has gone now to $15 now, okay, because I closed half of the position. So I banked a $4 loss already because that's 8 pips. I was at 8 pips and I took half, 5 microlots. And then I have $14 left. So my overall loss at this point would be around $20. So from $30, I brought down my maximum loss, potential loss, to $20, from 30 to 20. So I've saved myself a third of the money. You understand? I saved $10 that I have now available for the next opportunity. And if I don't know, if I see the momentum coming back, if I see the market returning to this area and gaining momentum to the upside, and then forming these higher highs and higher lows, I can add those $10. Okay, the 5 microlots I just took off, I can add them back. Okay, and I can play around with my trade as the market gives me new information that I can rely on making new decisions. Okay, so that's one example. That's how to scale out of the trade. Now let's say I'm now, let me hide this. Okay, let's say this is a fresh position of 0.05 lots. Okay, and I'm in a drawdown. I will wait for the market to come back to this level, and if I see strength into this level, or I will wait for the market to go all the way down to this level, and if I see a good recovery from this level down here, I will add back another 5 microlots, or I will add back another mini lot. Okay, and that would be the technique of adding into a losing position, because my initial trade up here is now in drawdown, but I'm consciously adding into that losing position. Okay, so this level, okay, I've taken down position. Now it's invalidated. So okay, I'll remove it, and I'll wait for the price to go into that level. That's my next valid entry point. So now if the market goes down here and it bounces up, I will add into that position. So even though I'm in drawdown for the trade, I will be adding into a losing position. And if I manage to go down from this point somewhere, okay, the market comes here, bounces up, I add, and somewhere here in the middle between this entry point and this entry point, okay, somewhere there, I will be already at break even for the trade. Okay, you know what I mean? Because I will be half of the distance between this entry point and that entry point. So at this point, I will be already at break even. Everything above this level, I'll be already in profit, even though I started in drawdown. You see how powerful this is? So this is the principle. If we see the market goes there and we have the opportunity to do this live, we might do it live. But these are just the principles, guys, and it's something that requires some practice and some understanding. But you will see how through adding into losing positions, always when there's a reason to add, and scaling down, okay, banking partial losses from losing position, you will see how your stats will start improving. So adding to a losing position potentially will improve your win rate, and scaling out of losing positions will potentially improve your risk-reward ratio. So that's the presentation, guys. Let's take some questions, because I guess there's some of them.
There definitely are. So thank you so much. I think a lot of people don't usually think about adding, especially to winners. More people add to losers, but they also don't do it right necessarily, right? So it depends, but it's a very interesting approach. But there was a comment that if you take partial loss, it will significantly reduce your win rates. What do you think about that?
Yeah, if you take partial loss, the depend on what happens with the trade, because if afterwards goes in your favor, your win rate, it won't be impacted, but you will be improving your risk-reward ratio. It's very hard, guys. It's very hard to have, that would be ideal, of course, having super high win rate and super high risk-reward ratio. I've never seen or it's very hard to find someone with a very high win rate and a very high risk-reward ratio. So depending on what you're trying to accomplish, as long as you have one of those high, you're profitable, right? And if you can maintain those consistently high, you'll be consistently profitable. So you're right. By taking partial losses, you might impact your win rate, but you will be contributing to improving your risk-reward ratio. So that's the trade-off.
Exactly. I think it's more of a psychological challenge for people to take a loss, because we don't, as traders, often want to take a loss because we don't want to admit that we are wrong. So we keep hoping that the trade is going to reverse instead of taking a partial loss and reducing it, because in the end of the day, you can scale back in when the price goes back into your profit, right? Do Absolutely. You do something like that? So if you take partial loss, can you scale back in?
Absolutely. And I think it's part of the it's never a 1-0 game. There's a lot to do when you're actively managing a trade. The market is constantly giving you feedback on what should you be doing at that point. So if you take partial losses and then the market is telling you, okay, I'm ready to go with you, then that's your opportunity to add back that trade. But in case the market would continue against you, you have saved that money already. But if it starts giving you the signals to go in your favor, you add that back. So you're right.
And that was the answer to the question, what if we take partial loss and then the market reverse, right? You can always add back in when you see that it's actually going in your direction.
The most challenging thing is understanding when is a good moment to reduce or to add. But as long as you have like something basing or backing your decision to either reducing into a loss or adding into a loss or adding into a win, then you're good. Okay, as long as there's a signal given by your strategy, a valid entry point, a key lever, something there to back your decision, then you're good.
Yeah. Do you think, Saul, the question from me personally, do you think it's more useful for traders who never practice scaling in or scaling out to practice it first on demo to find maybe approach the right or live account immediately?
No, absolutely. As everything in trading, the first, at first it's going to be confusing and you're not sure why you're doing things, and takes some practice in order to get familiar with this and get comfortable and understanding, potentially it's not for you, right? But every new things we do on trading, ideally to do them on demo accounts, okay? To practice, to understand, okay, every time I'm adding into my losing position, I'm actually losing more, so I shouldn't be doing this. or when you're reducing into losing trades, it's actually being beneficial for you. So you keep that. There's a lot of things in trading that will never fit everyone, So we need to practice and test things and understand why do I keep and what do I let go. But if you feel today that you're following your strategy, you should be making money, and something's not working, potentially one of these techniques will be the aha moment you were looking for, and you didn't understand why you're not being profitable, even though your strategy is supposed to be profitable.
100%. Sometimes this is one small change that can really shift everything.
Absolutely.
So how do you personally take partial loss? So does it depend on the market structure or equity or your personal risk management system? We have a question from the audience about that.
Yeah. So what I usually do, and I invite you to join the trading rooms. We're live 3 days a week through the whole day, and I'm there once every 2 weeks. On Wednesday, I'll be tomorrow. So join us to the trading rooms, and you will see me trying to demonstrate these principles live, because that's the way I trade. So what I usually do is I split my entry into multiple trades. The nice thing about the hedge accounts, the forex accounts, is that every click it's a different position. So for me, if I'm, for example, in this trade, if I'm looking to trade, let's say, one full lot at this first entry point, I don't go with one full lot. I might place 2 half lot trades. Okay, so I enter with two trades at the same time. And then when it's going against me, I just take one off. Okay, so instead of going into the edit position here and all these clicks are a lot of time to do, I just take trades off. So I open multiple trades and I just take trades out and I add new trades when I need it. So you will usually see me, and if I go to the to the history here, let's say last month, let's see what we got. Okay, you will see I'm very consistent with my volume, okay, because that's the way I trade. Okay, so I place a bunch of one lot trades, and then I just manage those trades. So I take some off and I add more, and when I keep my lot size consistent, then it's easier for me to analyze my my statistics. So that makes it more useful for me.
So what would you recommend to traders who just trade a very small account? Let's say they trade only one micro lot at a time, because they cannot in this way, scaling out if the trade goes in the loss, for example. So what would your advice be to the traders who are just started?
Yeah, usually the account size shouldn't be a problem unless you're trading micro lots, right? If you're trading micro lots, there's no half micro lot. Okay, there's nothing smaller than that, so it will be difficult to manage that. But if you're taking, let's say, even 2 micro lots, then at some point, if you want to scale out, you can take 1 micro lot out, and if you need to scale in either on a win or on a loss, you can add another micro lot. So the only scenario where you will not be able to actively manage your trade if you're taking 1 micro lot trade. As long as you're trading with more than that, you have another trade to either take out or to add it back. So I think especially on small accounts, it's a great opportunity to start practicing these principles, because on small accounts, if you're using micro lots, the wins and the losses are not very impactful, okay, are not very significant, and it's very helpful in order to focus on your stats and the performance of your trading without focusing on the money side of the trading. And only once you have mastered or feel comfortable doing that with micro lots in a very small account, then you can start sizing that up, and start doing the same principles. But instead of 1 micro lot, you do 1 mini lot or 1 lot or 10 lots or whatever it is. When you get into larger accounts, you will start, every trade will start being or representing a lot of money. You will see thousands of dollars going up and going down, and then that sometimes makes focusing on the process more difficult, because you're very focused on the money. So if you build these foundations and if you build these skills of active trade management in small accounts, okay, in micro lots, it will help you stay focused on the process and not on the money in the long run.
Yeah, so if you're just starting basically with a small account, just focus on refining your strategy and grow your small account to at least where you can take a couple of micro lots, and then you can start already playing with scaling in or scaling out of the trade as well.
Absolutely.
So, Saul, if you are adding to your position, do you adjust your stop loss together with extra positions, or do you leave it where it was initially?
No, my stops never change. You know, when I set a stop, my hard stops, is because I understand my setup after that point has been invalidated or is breaking down. So just as in this example, okay, if I was to add to this trade, okay, let's just put it temporarily just to have it in place. Okay, if I'm going to add a second position at that point, my stop will be at the same level. Wait, let me add it. Okay, my two stops will be at the same level because the stop, or it's representing where the whole setup has failed. Okay, so I don't want to be holding losses beyond the point where my setup has been invalidated already, which in this example, it's here. But if you're trading a breakout, okay, if I was, let's go back to our gold example. Okay, if I was, at this point we went, long, and at that point, instead of losing, I added a second position, just as an example. Also, the stop loss of this trade would have been placed at the same level here, because when we break down that consolidation range, the whole thing has been invalidated, and I want to be out of the setup. So doesn't matter how many trades I'm adding into the setup, my stops, all of the stops will be always at the same point.
And I think this is where the line goes, right, between playing with your position and trust in your position still. Because when you still keep your stop loss in place, it means you still trust your trade. You're just managing the risk to reward and how much you lose in this case. Because there was also a question, where is the line between trusting your position and becoming greedy and messing up with your trade?
Yeah, I don't know. Someone in the trading room, I can't remember who was that. I will have to. I manage my trade. I never marry my trades. I have gave up long ago of the fact that I want to be right. Okay, I don't care being wrong, because I know I'm executing fine. It's just the market or the trade that went wrong. It's not me being wrong. So as long as my setup is valid, and I, before going into trading, I'm analyzing. Okay, I'm trying to understand what I want to accomplish from this setup and what I'm expecting for the market to do from me in a certain position. So I did all of that work before I engaged into the trade. Okay, I placed a trade. So I'm unbiased of the outcome of the market. Okay, or that position. So I set my key levels. I understand where I want to be out of the whole setup, because that's the point I need to be out. Okay, my stop losses are, and in between I manage, but I never get married to that, because when you get married, and I suffer that, I learned that the hard way, you end up losing a lot of money. And if you don't end up losing a lot of money, you are end up losing a lot of mental energy and emotional energy, because you thought you should be right and you were married to that trade, and so all of the sudden the market, disappointed you. So you will be affected emotionally, and I don't want to be in that position. I just do my pre-analysis thing before the trade. I engage, I execute, and then I manage what I already think I understand it's manageable. But I don't get engaged with the trade.
That was such a good quote, what you said. I manage my trade, but I don't marry my trade. Correct. I really love it.
It's not mine. I have to remember who said that.
Well, that was a really good one. I'm going to make a note for this for myself as well. So, do you reduce the amount that you add to the winning trades, or do you add the same equal amount of lot sizes that your initial position that you entered?
On a losing trade or on a winning trade?
On the winning trade.
Yeah, you will. If you see me trading, most of the times I'm managing my losing trades, and I don't do a lot with my winning trades. Okay, and I go back to the beginning of my presentation. Most of traders are taking partial wins and full losses, and that I want to be doing the opposite. So if a trade goes in my favor, I bank profits and I wait for my next opportunity. And I'm more focused on managing the trades that are going wrong, if you know what I mean. So I'm taking partial losses and full wins. That's my goal.
So if you add to the losing trades,
yeah,
do you choose the exact same lot size as your initial position or the smaller one?
So no, usually it's the same one, but I might be, that's more sizing and not the management. But there's some webinars. If you go to the YouTube channel, and there's a model that I explained that I add as a pyramid. Okay, so I start small. Okay, let's say I start with 1 mini lot, and the second entry level I add either 1 mini lot or 2 mini lots or 3 mini lots, but usually larger than the first one, in order to get into my full allocation. Okay, because if in my mind I know in that trade I want to be with 1 lot, I don't get in with 1 lot at my first entry. So let's say I get it with 3 mini lots, and I have 7 mini lots to allocate. Okay, so if the market goes against me, then I add the rest of the lots, the 7 mini lots. I add them at a better entry level, and then I'm full allocated with my 1 lot that I wanted to be there. But it's just, instead of being with 1 lot at first, I was 3 mini lots and then 7 mini lots, just as an example. Or you can play with it. Okay, you can try 5 mini lots, then 5 mini lots, and then to play with it. I'm very discretional. You will see me trading, and you'll find I'm a very discretional trader. So it really depends on the setup and how many valid entry points I have within the setup. And if that's an A+ setup that I rely more, then I go more aggressive. So it really changes a lot. That's more the sizing, the allocation management, more than the trade management technique, which is always the same.
Yeah. So you said that you never move your stop loss. What about break-evens? Do you have your break-even strategy, or you never touch your stop loss at all?
No, I hate it. I remember myself. I've been there. Okay, you catch you get the breakout. The market is going in your favor. You trail your stop, and the market retraces, takes your stop. Okay, takes your stop. It takes you out of the trade for break even, and then continues in your favor. I hated that, and it was. I know. I've talked to a lot of traders, and I know a lot of traders are doing that and are suffering from the same things, and that it was going back to the same principle. Okay, that I'm taking partial profits. Okay, the market it's taking me at break-even many times, and that's affecting my profitability. So I take the full loss, I take the full profit, and I don't trail my stops. Okay, I just take the profits.
So it's either the full loss that you have, or unless you scaled out, or the full profit. So you completely trust your setup. And I think this is the goal, right? When you enter the trade, it should be the one that you completely trust.
You just need to be consistent with something. So you choose something that makes sense for you, and you run with it. Because many times, and that happens to me, I take the full loss, and the market continues in my favor, and I have potentially lost money because I left money in the table. Okay, I've made peace with that. I'm happy with that, okay? Because I know my next setup is around the corner, and I will have a new opportunity to make money. So I don't care about those potential larger wins. Okay, I just don't want to be. I just don't want the market. When I was in profit, I don't want to give that profit back. Which, if I had the opportunity to bank it.
Absolutely. Someone says, I'm heartbroken so many times that I gave up on marrying the trade. Yeah, that's so true. Saul, could you give their advice for beginner traders how to avoid frustration and manage your emotions when we lose 2, 3, 4 trades continuously? Is there anything that you could recommend?
How to avoid frustration where you lose 3, 4 trades continuously.
Because we've all been there, right? When we were just starting, you have so many years of experience. How did you get out of this, if you ever had it, right? This emotional range about being so attached to the trade or to the loser.
That's the thing. I think, you shouldn't be avoiding frustration. You should be managing frustration. Okay. And we're humans. We have emotions in us, and we need to understand what is actually triggering that frustration. And you will, I'll leave the long answer for Richard in the self-management presentation. For me, if you already trigger into an emotion, it usually comes from a risk management mistake you made. Okay, it's usually an oversized trade you took, or a poor setup that you took, and you shouldn't have taken, or you're applying the wrong strategy without knowing you're applying the wrong strategy, or applying the right strategy in the wrong moment, or the wrong context of the market without you knowing that. So usually the frustration is only the symptom of a deeper, problem, or something we need to a disease we need to understand. But just to give you something practical to do, you stop and you zoom out. Okay, you understand. You try to understand what led to that, a streak of losses. Was that the market? Was that my bad execution? Okay, you try to understand what led to that. Myself, the strategy, the market. Okay, you zoom out, you pause, you calm down, and you start the process of rebuilding your foundations and rebuilding your confidence. So you reduce risk, you reduce lot size, you even go back to demo trading, and you start applying your principles and your basics back until you see your stats are back in track. And once that happens, you rebuild your confidence into going again to live, again to large lot sizes, again to all of it. So the first thing you do is you stop and you zoom out, and you try to understand what happened. You rebuild your confidence, and then you go back to the markets.